This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Ah, boy. Welcome to Power Trading Radio, when your colleagues like to change the intro and show you his Ziggy Stardust and red patent leather boots. Thanks so much for that one, TJ. Maybe we can embarrass me more as we start off 2020. Hope you all had a great trading day out there today, although it wasn't the greatest trading session, kind of a weird-looking day. Our guest for today will be Wayne Citron. I mentioned Wayne is a longtime Chicago floor trader. What I love about Wayne is sometimes he just likes to drift off into stories from the floor. I actually thought it might be kind of cool to do a series on the program called Stories from the Floor, where we get these Chicago guys to tell us stuff that you and I probably will never see. Some of the stuff you saw in the movie Trading Places, yeah, it might have happened, but let's be honest, most of those old trading floor movies are a little bit exaggerated. But then you get to hang out with these Chicago guys like Michael Young, like Craig Weil, Wayne Citron, Bill Henner, and Sam Seiden, and hear just some crazy, funny stories from those floors. So maybe we'll get some of that today. Let us know what questions you have. If you have some, feel free to send those on in at powertradingradio.com. You can click that button there that says Power Blast, and we'll answer those questions as they come to me here in the studio on monitor A. And, of course, I'm watching our YouTube channel, so for those of you on Online Trading Academy's YouTube channel as well as Power Trading Radio's YouTube channel, hello, welcome, and I hope you have a fantastic day out there. So hello, Dave, Dana, and Gayer are already chatting up about, and Vernon. Hello, Vernon. All right, let me start off with our top 7 markets, and then we'll go to some listener questions, because I told you there's 3 of them I wanted to get to on today's show, which I did not get to yesterday. And promises are promises, so let's roll. TJ's going to bring up the chart of crude oil, which has continued its 2-day sell-off here. We had that big move up, obviously, with the news of attacks on Iran. Still a lot of uncertainty out there. I don't know which way this one's going to go. Obviously, I would love to have a peaceful resolution, but when you kick a hornet's nest, sometimes things get ugly. Still don't know the final outcome there, but you can see the move that happened today. Here is Click showing you that gap down, and really not a major range day, but all in all, it was a down day. 62.72 is where we closed. We're 3 cents lower than that right now at 62.69. That's a slide of 0.87%, making it your worst performer on the day. All right, moving on to indexes, which did not have a great showing today either, although for many of you who are looking at the Russell 2000, you're probably rather happy because at least it's not breaking those lows we saw from 2 sessions ago. Russell was down 0.30%. 1,658 was the final number there for Russell, which put it into 6th place. Technically, not a lot going on. You can see we're still drifting down off those highs we achieved on the 27th of December, so nothing out of the ordinary yet. I think we still are in play for a demand zone right around 1634. We'll wait and see how that one pans out when we get there. All right, number 5 brings us to the S&P 500, which I was watching today. S&P did not have the best showing either. You can see it's not as weak as the Russell 2000, still kind of just showing some sideways action here, at least for the better part of a week and a half. 0.28% slide. 3,237, and we are now down 4 points in the after-hour session on that one as well. So we're seeing a little slide in our indexes in that after-hour session. All right, number 4 brings us to the NASDAQ composite. I'm showing you the picture of the NASDAQ 100, which has a little spinning top formation. For those of you who don't know what a spinning top is, just take a look at the screen. It's where it opens and closes right at the same price and has a little bit of a topping and bottoming tail. That means there's a lot of indecision going on, and that's what we had with the NASDAQ today. All in all, it was almost break even. The composite was only down 0.03%, a slide of only just under 3 points, so no big deal. And the composite is trading at 9,068. But those are insignificant because they didn't make the podium and they didn't have any gains today. All right, we're starting off with the bronze medal. It's the Olympic year, right? Japan's hosting the Olympics this year. Well, we're going to host the financial Olympics here on our show. Gold on the day, having a bit of volatility. Actually, I'm glad I wasn't watching this one in the wee hours of the morning because it would have triggered me for a short opportunity and whipsawed me out of it. I talked yesterday about how on this big shooting star candle here, I'll have TJ draw a line across the bottom. I was really kind of waiting for it to break down below that line, and it did. And that would have been a sign for a potential short opportunity, but I generally like to do that during regular market hours. And that didn't happen. That tail you see happened in the wee hours of the morning, so it didn't trigger any trades. Gold ended up 0.41% gain, $6.40 move per ounce of gold to the north, 1,575, and it's continuing to move in the after hours, 1,578. All right, number 2. Going to the 10-year, that's the NZ, the ZN is what we're looking at now. That is a nice move as well, even though it doesn't look like much. It's still percentage-wise a very nice jump. Your 0.88% gain in the yield of that 10-year Treasury, 1.8 0.27 is where we ended up with for the 10-year. And of course, remember, you're seeing a red candle here. That's because as yields rise, the price of those bonds drop, and that's what we see here. All right, that was number 2 at 0.88% gain. Let's go to our number 1, second day in a row, and showing some just great moves. I'll refresh here because it might even be up even more now. This thing's been very, very volatile. Bitcoin, since we did the show yesterday, was up 3.17%. Love it. 3.17%, 8,034 is where it closed at today. That is a $246 per ounce. There's no weight to digital currency. $246 per Bitcoin increase to the north side. Yes, I see Brennan says, hopefully this will be the year for crypto. Yeah, we'll see. You know, it's been a couple down years. Hey, maybe we get some upside potential out there, and we'll see. Maybe we'll even talk a little bit more about cryptos if it becomes a little bit more of a player out there. It's been kind of stagnant for a few months, or a few years, a couple years anyway. All right, that's your top 7 markets out there. Hopefully you guys put some green on your screen with one of those asset classes. Before we get to Wayne Citron, who's going to be our guest, I mentioned I was going to go over a bunch of listener questions. The first one that came in was from Gayer, who, if you guys would like to talk to Gayer, he is usually on the Online Trading Academy YouTube page, so thank you, Gayer, for the question. He says, how do you deal with a bias? Example, when I look back at December, I had a bullish bias on Euro GBP. Okay, let's zoom in here, and what I want to do is I want to just take out January, and we're going to show you December. So here you guys can see the daily of the Euro British Pound, and I have to question it, Gayer, because my first inclination would be, why were you bullish? Why do I say that? Because look what happened from August all the way through December, right? It was nothing but down. Now, maybe in the tail end of December, you see a nice little spike here, but did we make any new highs? Did we achieve anything that would have made us feel like this sell-off is now over? And I don't believe that we did. Certainly this move up of quite a few pips would have been a good opportunity to be a buyer, but the grand scheme of things, we should still have a bearish bias on Euro British Pound, even if you include what happened over the last week or two. Why? Because the trend is obviously down since August. So, how do you deal with a bias? Very simple. You put in rules in place, especially money management and risk management rules. It's okay to go counter trend. For example, right now we look at the equity markets, the S&P, the Dow, the NASDAQ, et cetera, and you can be very bullish about those markets, or you could be extremely bearish. It doesn't make a difference which side you're on. If you are, let's say, bearish in these equity markets right now, and TJ, let's go back to, you can get rid of that chart. When you are bullish on an equity market index in the situation like we have right now, and you decide to go short, that's fine. How do you deal with that bias? You don't hold on to it. So if you are shorting the equity markets right now and you keep getting stopped out, you kind of have to stop that bias. Obviously, it's costing you money. In Gayer, your bias on the Euro British Pound, you have to put in rules in place that say, okay, I'm bullish on it, I'm going to go long, but if I get stopped out, and maybe you do 2 or 3 or 4 trades, it's up to you what that limit is, and you continually get stopped out, then move on. You need to shelve those biases. Look, we all want to buy at the dead low, and we all want to sell at the dead high. That's just the nature of the beast. Trying to do so can be one of the most dangerous things that we can do. So maybe if you are not an Online Trading Academy graduate, you might want to use some of the retail tools like moving averages or something to help you determine when those entries and exit points are, maybe some trend lines. If you're more of a student of supply and demand like Online Trading Academy, you have a much more rule-based approach that you could be using to time those markets and where to set those stop losses so you don't incur any big losses. All right, Paul said, where do you see financials, bank stocks going in the current quarter considering the repo market situation? Well, I had XLF up on the chart here, and there's XLF, which pretty much mirrors the equity markets. The difference is XLF has been a bit stronger. Keep in mind we have had a rising rate environment, and I think a rising rate environment will start to choke out the potential for banks. I think that financials are going to start to struggle a little bit more, especially if we start to see people's institutions' inability to make their financial obligations. We hear a lot about the corporate bond market, how a lot of that bond market is being downgraded into junk, et cetera, or sub BBB ratings. To me, that's a warning sign, and I think that there is already enough money lent out by institutions that could potentially come back and bite them. Not saying it's akin to what we saw in 2008, a totally different dynamic, but I do think that there might be I think the probability of having a pullback in the financials here soon with a rising rate environment is probably going to be a little bit higher, especially if we start to see any sort of housing or bond market bubble crash. they'll obviously all take a fairly big hit. So I think I would be a little bit skeptical on financial stocks, bank stocks. You can see that chart right now. It still looks rather positive, so just set some stop losses on it for you, and if you get stopped out, that's okay. If you feel like it's going to start to fall even more, then throw some shorts out there and see if we can capitalize on things to the downside. What was the last one? Christopher says, what's your typical or suggested progression expanding one's horizons from Forex? Well, I think the progression should always be very simple. You start off with core strategy, which is the foundational course online trading academy. That teaches you the patented methodology of supply and demand, how that strategy is implemented, and all the rules. And then I think you take it at your own pace. Look, some people are much more interested in the Forex markets because it's global, it's 24 hours. I think there's risks there because leverage is extremely high and new traders flock to that leverage, which I have seen that blow more accounts than a Larry King wedding experience. I don't know if that's pretty bad, isn't it? That's a horrible analogy. If you look at futures, futures are a great market because you now have the ability to trade on a centralized exchange, but you can trade wheat, soybeans, metals, grains, all these different commodities, as well as interest rate products and currencies, but you may not get as high of leverage. I think options should be an accessory to everybody's trading style, and at some point, as you can see on the show, it may be your focal point. A lot of traders out there loving the options market to use on equities, ETFs. You can use them on futures, and if you find the right broker, you can use them on Forex markets as well. So I think it goes core strategy, then pick the asset class that you want. I actually like the stock trading class simply because it identifies the market that options are generally based off, which is single stocks. From there, I would probably personally go to futures, but I don't think there's a wrong choice there. Forex and options, I don't know if the timing is right there. I think options could be done a lot earlier because options are so critical in understanding the power of leverage and the ability to have a tool that allows you to make money in up, down, or sideways markets, or markets that just do nothing. All right, I got through those 3 questions. I told you I would. I promised you I would. I did. I went a little bit over. Wayne Citron's probably all upset with me right now because I'm cutting into his time on the show. When we come back, I will have Wayne here on set. We're going to talk about whatever it is you guys want to talk about, probably the futures market. So if you have questions, join the discussions and join Gayer, Sabrina, Demetrius, Dave, Vernon, and that's it over there on Online Trading Academy's YouTube page. Of course, you can always got Brendan and usually Unscammables over there, Gizmo as well as Ruben and Gary. Hello, Gary. He's a newbie to the show. You can see them on the Power Trading Radio YouTube channel. Say hello to everybody. Send in your questions. We'll be right back with Wayne Citron after a short break.
There are lots of different reasons why I teach. I know what it's like from the beginning because I was a student here. I love going around the classroom and you get those aha moments where, you know, slowly those light bulbs switch on as the week unfolds, and for me it's magical.
I've been telling students for years that I derive professional satisfaction from sharing my knowledge about trading. I grew up on the floor of the Board of Trade. My father was my first mentor.
I like to see people run, and in order for them to run, they need to walk well first. And for me to help them build a solid foundation and then watch them go forward, that's something that money can't buy.
What these people are now realizing is the freedom that they have always wanted to achieve. And it's a quite humbling and honorable experience to be able to know that in some small way I contributed to them.
The students make the academy. And I meet wonderful people from all walks of life, and they always have a story to tell. And the story is always interesting.
Being able to explain things in a way where the light bulb goes off, and that gives me the chills. It's a wonderful experience to see that growth in somebody else and that you're a part of that. It's magic.
The students, I really want to enable them to bypass the challenges that everybody goes through.
There is rather a selfish aspect, and that selfish aspect is I have found more of me as a person. Just a self-discovery.
And in every class that I teach, I get to share my knowledge, and I get to see each and every one of my students learn how to trade in a bull market and in a bear market and even in a sideways market. And each time I see that student of mine take that first trade, it's such a rewarding experience. It's awesome.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. Yes, I plugged in my microphone this time. We're not going to make that mistake twice. We're joined here on set by a gentleman who's spent a ton of time on the floors out in Chicago. Of course, he's spending a week here in Southern California to teach a class I'm assuming is on futures. We've got Wayne Citron joining us. Wayne, welcome back.
Good to be back, buddy.
Are you teaching futures this week? Is that what it is? All right, cool. What's new in your world? It's January 2020. We survived 2019. Maybe I'll start with a little bit of floor trader housekeeping. I know what I do as my routine and procedure. Is there anything special that you do at the year end to regroup, reevaluate, forecast, anticipate? Anything special you do to ring in a new year with regards to trading?
No.
Gonna be a great show today, guys. Okay.
You're just basically always trying to do the same thing, stay consistent, stay positive, move
do you
forward.
do you ever go, so for me, one of the big things, and I'm always pounding the table on this one with the viewers, is it's critical that you evaluate what you have done wrong and what you have done right. More importantly, what you've done wrong, so you can figure out how to fix it. Now, you've been doing this so long that probably doesn't need to happen because you've got your shtick, right? You're like a stand-up comedian that's been doing it for 30 years. You don't need to try to be funny anymore. You just are. Well, I think when people start out, they're on stage going, "I'm trying to be funny. I'm trying to make trades." You got to figure out what you're doing right and wrong. So, was there a point where you stopped evaluating? Because it sounds like you just don't really evaluate your stuff anymore.
Well, to some degree, I suppose that could be taken as true. But the point is when you're first starting out, I would say that the most important thing, unquestionably, and it's what I preach in every single class, is consistency.
Okay.
And, once you've achieved consistency, and I don't care on what level it is, if you've achieved consistency over a period of 4 to 6 months, where when you sit down in front of your computer, rather than being nervous when you sit down in front of it, you actually sit down because you're excited, because you feel confident that you can continue doing this. You hit that consistency level. Like I try to say to the class, once you hit that point, I would basically say the world is your oyster. All you got to do is keep up the consistency, and you can add to your size at that point.
Okay.
And at that point is when you can really start to make progress.
So in that statement, so now I'm going to be the interrogator here.
Okay.
You said you're striving for consistency. So obviously in that goal of consistency, you are evaluating and making sure, because that's how you're measuring your consistencies. You're checking your results and finding ways to improve. So there is some analysis that goes on in there. It's just making sure.
Okay, from that vantage point. But, that was more or less when I was starting out years and decades ago, frankly. And, now, it's a little bit of a different story because most of my trading career is behind me. I mean, I don't want to sound, morose, is that the word?
Sure. The word of the day, morose.
But most of my trading career is behind me. And right now, I really enjoy what I do, which is trade a little bit, travel, teach. It's fantastic.
Yeah. And in that, you've traded a lot of things over the years. I know you've traded a bunch of different asset classes. The one that you gravitated towards the most, and certainly I think the one that you love to talk about, is the Fed funds futures, which, for some of our viewers out there today, you may never have even thought about trading this product. Walk us through a little bit about why that is. Why is it that you've gravitated towards it? Because when most people think futures, they're thinking, I've got index futures, S&P, NASDAQ, Dow, Russell, or maybe I'll go into some commodity futures, gold, obviously, or interest rate products, the 10-year, the 30, these types of things. Well, now you're talking Fed funds futures. That's a different product that most people that are in the financial or that aren't in the financial markets don't even know exist, but it does. How'd you gravitate towards that, and why is it one that you've stuck with?
Well, that too becomes a bit of a long story. Okay.
Well, we've got plenty of time today.
All right.
No commercial breaks for today's Power Trading Radio, folks.
Okay. So what happened was a friend of mine I was at the Board of Trade.
Okay.
And a friend of mine was over at the Mercantile Exchange. He was working in what's called the LIBOR pit.
Yep.
Have you heard of LIBOR?
I have heard of LIBOR.
Okay. And it was so long ago, I really don't even remember how to really interpret it any longer. But it's the London Interbank Offering Rate. And I went over to the Merc and I started trading LIBOR and what would be called the lead spreads. So that would be LIBOR against euro dollars, not the euro currency, but euro dollars. So you're a spreader.
Right.
Okay, so then I really went from being a front month outright trader into being a spread trader. And what happened was the volume in the LIBOR actually just declined precipitously. And what I did is I wound up, and I was really enjoying spreading and trading the short end of the curve, also known as STIRS. You probably know that, right?
I don't. That's actually, I'm learning something new every day.
Short-term interest rate, STIRS.
Got it, yeah.
So then I went over to the Board of Trade where they had the Fed funds contract, and I went there in, I want to say, April of '95.
Okay.
And it was such an obscure contract back then that this one guy who had come down to the floor a couple years before me, he was a brand newbie, and he went down to the floor and he said to somebody, "Where's the Fed funds contract?" And the guy looked at him and goes, "What's that?" That's how obscure it was.
And it certainly has gotten more mainstream over the years, but it's still an obscure product. It's not like the...
But what happened is that in '95, remember Greenspan's Irrational Exuberance?
Yes, yep.
Okay, well, right around that time, the volume in the Fed funds pit literally exploded. Okay, and the Fed started moving interest rates, and then along came a bunch of other events, for lack of a better word. One was the Thai baht currency, another one was the recession. What year was it? The 01 recession, which led to a lot of interest rate changes.
And that's really, Greenspan, if you go back before Greenspan, you're looking at Paul Volcker and Miller, these were guys who were historically keeping the decisions of the Fed close to the vest, no press conferences, didn't say squat about it.
Oh, Greenspan too.
Well, Greenspan created Greenspeak, where
Right.
he would just, some senators asked him a question and he would take them on a journey, a verbal journey that just said absolutely nothing and come back to a point.
Do you mind?
And the senator goes, "Thank you, Mr. Greenspan, for your input." And he's like, "I have no idea what he just said."
Do you mind if I share this
Well,
with,
of course, we
with
love
your
it.
audience? So here we are, a bunch of Fed funds traders. Greenspan would be on TV, and he would get off, and we'd look at each other and go, "What the hell did he just say?"
We all were.
So he was a master at Greenspeak.
Yeah.
But on the other hand, this is probably outside of my realm of expertise, but I do put a lot of blame on him for the ultimate 07-08 recession.
Okay.
Okay, in 1995, when he made that, we have something about don't buy into irrational exuberance.
And the market went up significantly from there.
And then he bought into it, lock, stock, and barrel, didn't tighten interest rates, didn't raise rates, I should say. And he was buying into, well, as long as productivity increases, we can tolerate this. And it was irrational exuberance, and he did nothing to stop it.
Oh, well. That's opportunity. He created opportunity. Okay, so let's go from Greenspan. So in the 90s, you started working on this obscure product, the Fed funds pit. Now, that's your main thing today, right?
No, not really.
Okay.
Not really. Because, once again, this is just a personal decision.
Okay.
All right? When you trade the Fed funds, it tends to be a spread market.
All right.
Which means that out of, figure 225 trading days a year, 195, 200 trading days a year, you go home with positions on every night. It gets old.
Yeah. Okay.
So now, with core strategy, supply and demand levels, I have the, what word am I searching for?
The flexibility, the luxury.
Yeah, the luxury is a good one. Of day trading, the same day, in, out, going home, sleeping like a rock. It's perfect.
So you're no longer really looking from the spread perspective. It's saying I'm going to be more directional.
No, everyone, and it really isn't directional. The way it would work is you would base your spread based upon the perception of
Right.
of the percentage of the Fed, the perceived percentage, what is priced into the market in terms of the next rate cut, the next rate hike. And if the spread between 2 months is, shall we say, 12.5 points, okay, 12.5 basis points, are you with me on that?
Yeah, I'm listening.
And you're expecting a 25, a quarter point rate hike or cut, right? If the meeting's in the middle of the month, half of 25 would be 12.5, right?
Yep.
That means it's priced in 100%. So if it's trading at 4.
But you're day trading these things.
No.
Oh, okay. I thought you said you were flat at the end of the day, not wanting to
No.
go home.
That's
okay.
why I'm really not keen on trading Fed funds any longer.
Got it.
Because you would go home with positions every single night.
Got it. Okay. Because for some reason I was thinking, okay, you don't like that, but now you're going home. Now it makes sense.
Now I enjoy being flat, trading during the day, and quite frankly, sleeping like a baby.
Nice. Good.
Can't tell you how many nights I'd wake up at 3 o'clock in the morning and just go, all right, let's go see what's going on. Then the next thing you know, you're sitting there for 2 hours.
Yeah, and no insomnia here. Some people see how my eyes are all puffy sometimes I do the show. Yeah, it's because I'm staying awake late at night. All right, so since you are such a student or I guess a master of studying the Fed funds futures, we hear from we hear from Powell and the Fed that going to be no rate hikes in 2020. Everything's going to stay the same. You believe him?
I believe that's what he wants to do, but that's not what the market says.
Okay.
The market says that between now and a year from now, you have at least one more cut priced in and maybe even a little more.
Yeah, I'll bring it up.
I'm not going month to month. I'm going a year out.
Yeah, I'll show you this was kind of interesting. So this is the Fed funds futures right now from the CME, and they're basically saying that right now, at where it's currently at, which is 1.5 to 1.75, that they only see it going higher. And this is by December of the, hold on, never mind, sorry. I clicked it, but it didn't show up. There we go. So, as you pointed out, there looks like potential for cuts. You got 38.2%, 25 basis point cut. You're looking at a total, I can't do the calculations in my head, but it's probably, 56% chance that we're going to see at least one, maybe two cuts. And then you can see it tapering off all the way down to, 5 cuts. That would be a little bit extreme, I think. But
oh, my God, no.
You never know. You never know.
That isn't going to happen. But between now and a year from now, all I'm saying is from now to 1 year out, we've got one more cut priced in, and maybe even a little extra. Does that make sense?
Yeah, I'm kind of with you. I feel like you'll probably see a rate cut, especially if we start to see more turmoil and market broiling. I mean, obviously you run in external events like the Iran situation, the trade war, which is funny. No one's even talked about the trade war. It's all Iran right now, which is a nice diversion. But we do have some major issues, which could create some headwinds out there. One of my colleagues actually was showing me some documentation that the tariff situation has clearly been passed on to the end user, the consumer here in the U.S., which of course we talked about that when the trade tariffs happen. That monetary effect, that monetary ripple will ultimately come back and hit the economic data, which we'll have to wait and see exactly how. But yeah, we've got a lot of uncertainties out there, and I think that the Fed may have juiced up rates a little bit just so they have the potential to start to cut them if they need to, if the doo-doo hits the proverbial fan.
Oh, they always wanted to get backed out of the corner.
Right, and they were stuck in a corner.
Oh my God, yeah.
Yeah.
Why do you think they were doing the twist and QE and all that good stuff? Because they had nothing else left to do.
Yep.
But I will tell you this, since you touched on tariffs, an associate of mine who just imported some product from China, when he placed the order, his estimated duty cost was $1,500, and that was, the estimate was done about, 2-3 months ago, before all this stuff. And when it came through, his duties were over $8,000.
Wow. What kind of product he's smuggling in over here, buddy? Because most of you took a 20-30% tariff, so that's a huge jump.
You're not kidding. And if you want to know what, I'll tell you. It was USB flash drives.
Really?
Yeah.
Wow. Well, those ones we can get at the supermarket for $1.50 for 4 gigabytes are now going to be a little bit more.
Well, they're still imported from China or Taiwan.
Right.
And that's where you had to go. So he had these bracelets designed and imported, and the initial estimate was $1,500, and when the final bill came, it was a little over $8,000.
Yeah, and then at the end, you got to ask yourself, especially from your friend who did this as a business decision. He's looking at that number, going $1,500. Great. Here's how much I'm going to make per item. Here's my cost, ROI. That completely screws up all those metrics, and now you have to wonder who's going to pay that cost. Is he going to go to the Chinese supplier and say, "Hey, can you eat this?" And they're going to go, "No."
No.
Yeah. So here you and I get to pay.
So exactly. Well, it is like John always says. Our in-house John. He always says a tariff is a tax.
Yeah. A lot of you guys, Gizmo, you're right. Rate cuts are crack for the markets. Yeah. And the Fed is the pusher. The Fed's the ultimate dealer out there for the drugs for the market.
I don't really think the Fed wants to cut anymore. We've talked about this until we're blue in the face.
They want to.
And if you don't think I'm stymied by what's going on, I am. I mean, right now, This is just an opinion. Do you mind if I?
We love opinions.
Okay.
As long as they're FCC compliant, we're good.
Okay. I mean, right now, everything is beautiful. It's almost like we're singing in the sunshine, and yet the Fed's cutting, and manufacturing in the United States is almost in a depression. Okay. Now they
and the manufacturing numbers are not looking good.
No, they're not looking good. They're looking horrible.
Yeah.
So are they? Dear Lord, we hope they're smart, and we hope they know what the heck they're doing. So could this be one of the reasons why you're seeing cuts, why you're seeing people like Bernanke and not Powell, but Janet Yellen actually talking about the acceptability of negative interest rates?
Right.
Why?
Why not?
Now I'm throwing it out conversationally.
Right.
Why? They never talked about this stuff before.
Because it hadn't been done. But it's funny because we look now at the experiment that's been going on in Japan. You could talk about Swiss National Bank also. You have other countries that are negative, and it hasn't, to this extent, been detrimental to their economies yet. Again, we don't know. I mean, it's like taking a drug for the first time. Well, seems to be working okay. You sure? No, let me have another one. It's like 4 or 5 pills in, you're going, oh, wait, hold on a second, that wasn't very good.
Well, I'm wondering where you're going with that.
No, but it's an experiment, right? I've never heard of negative interest rates, and I had Bill Addis in the program, who is a very experienced bond guy, and he teaches for financial institutions, and he goes, I've never seen this. I don't know what the hell this is all about. So, we're still learning, but if our Fed is keeping rates positive, then obviously foreign money and capital is going to be coming into our markets, which would be good from one front, but it also makes us less competitive with the rest of the world because they have such cheap currency. So, yeah, I don't know how this all pans out, but I could easily see us going negative down the road. Why not? Let's punish savers.
We never have. Not even during the Great Depression did we go negative.
Well, it's the first time for everything.
Well,
so you don't think it's going to happen?
No, I don't, but
Okay.
again, it comes back full circle. Why?
Sure.
Now, I did do a little bit of, I always like to come in a little bit prepared, so I wrote down a couple things, okay? You ready?
Sure.
You'll find this interesting. Now, again, this is just a little bit of heads-up research I did, not a big deal. And some of the quotes I found were the U.S. manufacturing is in the biggest contraction since 2007, 2009.
And that's for the manufacturing numbers today, guys. We actually had non-manufacturing numbers come out today showing actually a nice increase, which is interesting because the manufacturing area continues to suffer. What we've seen historically from America is our resilience. So if manufacturing starts to just completely disappear, there will be new areas that pop up. And that's obviously we're seeing those results in the ISM non-manufacturing PMI. We hope so, right?
Yeah.
Okay.
And another quote that I read today is manufacturing weakness is close to dangerous levels. Readings under 46 are consistent with a recession. The reading currently is 47.8.
Right. Yeah, it might have been 47.3, the one came out yesterday, I think. But yeah, either way, it's sub 50. But so you're basically taking one step further and saying that the economist to be below 46 is recessionary. Because we're teetering between 50 and 46 right now.
Right, but then we come back full circle. Why are people even talking about recession when
because it's fear-mongering?
But the stock market is,
great.
record highs,
Yeah.
everything's gangbusters.
Well, it's hard to ignore the data, right? You don't want to ignore that data that's out there.
All right, so that's, like you said, you had a gentleman on the show, and he said he's in a conundrum.
Well, I think a lot of people are in conundrums. You're all looking at what's going to go on here and how do we play this. And again, it goes back to what we talk about on the show all the time, which is, look, I don't care whether you're bullish or bearish, but you'd better have a plan in place for the bearish side because right now people are neglecting that. And when you look at this market since 2000, this isn't even 2009, this actually goes back into 2019, it's been incredibly strong. So it's bottom line is have a plan because even if we get below 46 on our manufacturing numbers, that still doesn't guarantee anything. It's just, it's like going to the doctor and saying I have really high blood pressure. Well, it doesn't mean you have a heart attack, but if you don't get it under control, your odds are increasing that something's going to go wrong.
Yeah.
All right. People's lie, numbers don't. John, I love the last name. John Fibonacci says people lie, numbers don't. True. However, I will say that with John, that one thing I've learned, in especially hosting the show, we had a gentleman who was on the program. He worked for the Bureau of Labor Statistics, which is responsible for giving us some of this data, and he said that they changed the components to benefit political parties and agendas. So you say people lie, numbers don't, but the numbers that you were reading are lies themselves because the back-end data has been cooked. So be very careful when we look at the numbers. If everything remained constant, yes, the numbers don't lie. But when you change the data inputs into these studies like CPI, PPI, GDP numbers, you can remove a component to benefit or hinder that number. To me, that is manipulation at its finest. Wayne, you here in Irvine, California, teaching this week. What's your teaching schedule going to look like going forward? You know where you're going? Know where you're headed?
I usually don't, but this time I do.
Wow, I was surprised. Usually you're like, I don't know, I'm teaching somewhere. Where are you headed?
I'm home for a week, then off to Orlando. And then next month, I'll be back here. So I'm stuck back on your show.
Stuck?
Yeah.
Well, next time we'll have to go out to dinner or something.
Oh, you say that all the time.
You never tell me you're coming. I know, but you got to let me know, because I don't go into your class all the time. I mean, I sit there and drool in the window like, I wish I was in the class right now, but you don't see me.
I'll let you know. I'll text you.
Let me know.
That'd be a pleasure.
Awesome. Thank you so much for coming on today. I appreciate it.
Are we done?
Not yet. You got to wait for me to do an outro.
Oh,
He's just
right.
jumping the gun. So for those of you who would like to take a class with Wayne, participate in some of that experience and knowledge and trading history, you can take a class with him. It is Orlando will be his next stop. You can find out more information about Orlando or any of the other 48 physical brick and mortar schools we have online trading academy. You can do so by clicking that link that's showing up on our social media channels. If you're on YouTube right now, you'll see that pop up on our online trading academy as well as Power Trading Radio. And if you are listening to this on the podcast as you're running at the gym, hope you have a great workout. Go to powertradingradio.com. You'll see a button that says free class at the top. You click on that one, you type in your zip code, same thing. It'll tell you which of our campuses is nearest you. Free classes, paid classes, community events, and you might even be lucky enough to see Wayne Citron teach a class for you. We're going to take a quick break. When we come back, I have economic announcements and earnings calendar information. Stay tuned, everybody. We'll be right back after a short break.
It's just very gratifying, and the benefits of traveling and getting to share my knowledge and really seeing a student, on Saturday morning, a little trepidation, a little nervousness, and then by Thursday and Friday, they're just following the process, clicking buttons, trading, first at Sim, then live, and it's just tremendously gratifying. So I'm looking forward to the next 10 years.
Trading can be a lonely career, right? Especially if you're just sitting in your basement by yourself, typing away on a keyboard. So I needed an outlet, and I'm able to come and connect and share what I've really enjoyed, and it's helped me. And so there's part of that's the giving back, and I really enjoy that. And if I can make a difference in somebody's life, that's a pretty awesome thing.
Seeing students start out, well, I'm not sure, I'm not quite sure, I'm nervous, and to be able to give them the confidence throughout the week where they feel that they finally can do what they want to do, and that they know that I'm there, that Online Trading Academy is there for them to hold their hand, help them out anytime they want to be. To me, that's the best possible thing you can do.
For me, I wanted a way to be able to give back. Naturally, I've learned something at such a young age that this is a skill that I can use for my entire life. So being able to give back to other students who are going through that same journey, that's something that to me means a lot, and that it's a pleasure to be able to do every day.
This is Power Trading Radio Live. Real people, real money, real trades. Visit us online at powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. I'm Merlin Rathbone with you for your Tuesday edition. Hope you enjoyed that one. Wayne is just always one of my favorites, guys. We have so many great traders that are within the folds of Online Trading Academy, and not only do I love learning from them, as I learned a couple things today talking about different interest rate products, but the experiences. There's so much character and experience that for me, when I started off back in the late 90s, was critical for my success, at least from the traders that were on the floor back then. And that was retail environment. This is just a different ballgame, talking to guys that are from the institutional side and actually the Chicago floor. So just great to have them on the program today. Hopefully you guys enjoyed that. I know we kind of went off topic, but sometimes that's the beauty of this show, is how organic it is. You guys can certainly steer that conversation. We definitely appreciate that. If you want to see Wayne in action, he mentioned he'll be teaching in Orlando. That's his next stop. And then coming out to Irvine, California. If you happen to be in either one of those locations, well, I would encourage you to sign up. Remember, if you're an Online Trading Academy graduate, you can retake those classes on a space-available basis, so contact your center and let them know. If you are brand new, well, join us. Let's learn how these markets truly work and how we can profit from them. You can find out more information, again, by clicking that link that's showing up in your social media right now. That'll get you all the info you need to know about which center is closest to you. Real quick, I see we've got a nice discussion going on Power Trading Radio's YouTube channel. Brendan says, I expect gold to clear 1,700 this year. Gizmo's backing it up, saying at least. I am in total agreement Absolutely. I'm going to actually bring that one up here because I think gold, I think 1700 is like not even a challenge at this point. I think that's just, it's not a question of if, it's a question of when. TJ, bring up the weekly on this guy so we can see some of the historical levels. You guys can see that 1700 hasn't been hit since 2013. And right now we are, 1700. We were ripping right into an area of supply. So 1600 is an area that it may have some challenges at, but then we move up to 1700, you'll notice that there is not that far to go. I think that 1700 could be very, very easy target to achieve, especially given the global instability, and I think that's going to be one of the pieces that really carries it forward. So we may see a surge in gold. I'm with you guys. I do think 1700 is a very, very realistic target for gold at this point. I think it could probably go much higher than that too. So anyway, just wanted to give you guys a little support on that call you're making on the chat out there. John Med, not quite Chicago weather. Yeah, well, we love California weather. That's why we're out here. All right, TJ, you had the economic calendar up there a second ago. Bring that one back up so we can talk about what's happening tomorrow. Obviously, jobs are of interest, but it's not as critical as it has been in the past. The only reason that this number starts to get worrisome is if we start to see bigger layoffs happening with regards to ADP non-farm employment change and unemployment rate. Given the fact that things seem to be running full steam ahead, we will say, full employment, I don't see any drastic things happening here, but keep an eye on these job data numbers going into Q1 and Q2 of this year. Why? Because if we are going to see company profits take a hit, that's going to immediately be reflected with layoffs. And we start to see these ADP non-farm employment numbers or unemployment rates start to rise, that could be the beginning of maybe a cyclical down move in the equity markets. Be careful. I think that's one of your early warning signs. So tomorrow's number may be rather important. That's the ADP non-farm employment change, which comes out for the U.S. We also have crude oil inventories. Of course, we've seen some extreme volatility in crude oil recently. That will not change here going forward. Euro has German trade balance and industrial production. British pound has BRC retail sales monitor and the RICS housing price balance. And finally, for Australia, trade balance numbers as well. Moving on to the earnings calendar, it's been awful for the last couple of days, really nothing to speak of. We've got Walgreens, Constellation Brands, Lennar, yes, home builders coming into play. We also have RPM International and Helen of Troy will be reporting earnings tomorrow. Now, guest on the show tomorrow, I'm not sure if he'll be on. I was trying to flag him down today, but he is teaching late. Todd McLean will be our guest on the program tomorrow. We'll talk about equity markets and, of course, go into whatever listener questions. If you have some, feel free to send them on in, powertradingradio.com. We always love to get your questions. Yesterday, I went through at the very end and grab some questions that I didn't get a chance to answer, but I haven't seen any yet. So if you guys have something you want us to address on tomorrow's show with Todd McLean, send it in at powertradingradio.com, click the button that says Power Blast, or leave it in the comments section below the YouTube video as we progress, and I'll go check all those out tonight, and hopefully have them all ready for tomorrow. Till then, happy trading, everybody. We'll see you tomorrow. Take care.